now let's look at protecting the most valuable asset that you'll purchase through insurance. So I'm pleased to introduce Andrea Medina Vera here. She's our early career education specialist, and she's focused on supporting new dentists, dental students, and the broader dental community. With a background in financial services and business development within the healthcare sector, Andrea delivers educational sessions on insurance and risk management strategies tailored to early career dentists. Andrea will offer you insights on the solutions you need and tips on the questions to ask to find the best option for you and your home. Andrea?
Thanks so much, Stephen. When we're talking about protecting one of the largest assets you'll own, your home, it's essential to have a plan for the what ifs. We'll cover some key scenarios that can impact your ability to own and maintain a home, such as death, ensuring your family can stay in the home if something tragic were to happen, sickness or accident, protecting your finances if you're unable to work, and flood, fire, and break-ins, safeguarding the property itself with the appropriate coverage. These what ifs may not be fun to talk about, but they are crucial to address. Over the next few slides, I'll walk over some insurance essentials you should consider when buying a home. Let's take a closer look at how life insurance and mortgage insurance stack up. It's important to have a plan for your property and mortgage if something were to happen to you. That's where life insurance comes in, which helps you pay off the mortgage at the time of your death. It's important to note that there are different kinds with significantly different features and premiums, but let's zoom out for a moment to compare life insurance and mortgage insurance. They both have a similar purpose, but there is a major difference. With life insurance, you own the policy and you get to name your beneficiaries. They decide how to use the benefit. Whether it's paying off the mortgage, covering education, or other expenses, it gives them flexibility and the benefit amount stays constant. On the other hand, mortgage insurance is owned by your lender. The payout only goes to the mortgage, and as you pay it down, the coverage amount decreases, even though the premiums stay the same. The takeaway here is that life insurance puts control in your hands and provides greater flexibility and peace of mind for your loved ones. This graph tells a story. With a Term 20 life insurance policy, the coverage amount stays level. If you have $800,000 in coverage, your loved ones will receive the full amount no matter how much of the mortgage is left. It's their money to use as needed. With mortgage insurance, illustrated in purple, the coverage shrinks over time as you pay down your mortgage. If something happens, the payout goes straight to the lender and it may not always cover the remaining balance. The bottom line is that life insurance ensures that your family gets the full protection they deserve with no surprises. Now let's talk about cost, because this often surprises people. For a $1 million mortgage, you can see the difference here. The blue bar shows a Term 20 life insurance policy, lower monthly premiums and consistent coverage. The orange bar represents mortgage insurance. It costs significantly more, yet the coverage decreases over time as you pay down the mortgage. It's kind of weird. You're paying more for less coverage. With life insurance, not only is the cost better, but your family gets the full benefit no matter what's left on the mortgage. We've covered why life insurance is so valuable, and the next question is, how much coverage do you need? It's not just about your mortgage, as life insurance can replace lost income, fund education plans, and cover expenses like childcare or other future opportunities. To get a quick estimate, you can use CDSPI's online calculator. It's simple and it'll give you a picture of your needs. From there, working with an advisor can help fine-tune your plan and make sure it fits your family's unique situation. Here's a quick question for you. What's the #1 reason dentists and dental students claim disability insurance with CDSPI? The answer is B, musculoskeletal. Does this surprise you? Dentistry, as I'm sure most of you know, is a physically demanding job with repetitive strain injuries that are common, and they take dentists out of work for weeks, months, or even years. Imagine the impact of not earning an income while still needing to cover mortgage payments, living expenses, or practice costs. This is where disability insurance steps in, ensuring your income is protected if you can't work due to an illness or injury. This stat is eye-opening. 1 in 4 dentists will experience a disability lasting 2 years or more. These numbers are based entirely on claims made by Canadian dentists through CDSPI's Disability Guard program in 2023. A disability can happen to anyone, and when it does, the financial impact is significant. This is why income replacement through disability insurance is so critical. It ensures you have a safety net if you need to step away from your career to recover. So, how much disability insurance do you actually need? If you earn $125,000 a year, you'd be eligible for $5,900 per month in disability benefits. Ask yourself, would that be enough to cover your expenses if you couldn't work for 2 years or longer? A great feature to keep in mind is CDSPI's future insurability guarantee. As your income grows, you can increase your coverage without medical underwriting. That means no health questions, making it easier to adjust your protection as your career advances. CDSPI has negotiated the highest quality disability coverage available, tailored specifically to Canadian dentists. Some key features include guarantee step or level premiums, so costs stay predictable, non-cancelable coverage until age 75, so you can rely on it long term, own occupation protection, so you're covered if you can't perform your role as a dentist, additional protection like HIV and hepatitis coverage as well. Plus, there are add-ons like the future insurability guarantee, which I just mentioned, and the cost of living adjustments to ensure your benefits keep up with your needs over time. This coverage provides financial security and peace of mind so you can focus on your recovery without worrying about your finances. Here are a few key stats to put some things in perspective. Nearly 1 in 2 Canadians will be diagnosed with cancer at some point in their lifetime. 9 in 10 Canadians have at least one risk factor for heart disease or stroke, and 45% of Canadians between ages 35 and 49 have no emergency savings to fall back on. When a critical illness like cancer, heart disease, or stroke hits, it's not just life-altering, it's really expensive. Medical treatments, prescription drugs, or time off work can create financial strain at a time where the stress is already very high. That's why it's important to have a plan in place that protects you against the unexpected. We never expect to fall ill, but when a medical condition strikes, you don't want to be caught without support. Critical illness insurance is an affordable way to cover your medical expenses and support your quality of life and recovery if you're ever diagnosed with a critical illness. It can provide financial support by covering your family's financial needs or preventing you from having to work while ill. Here's how it works. If you're diagnosed with one of the 25 covered illnesses like cancer, stroke, or heart attack, you'll receive a tax-free lump sum payment. This payment is yours to use however you need. You can use it to cover out-of-country treatments, pay for medical expenses or recovery time, or even take care of your mortgage and living costs so you can focus on healing. For example, a 28-year-old male dentist recently secured a $100,000 policy for just under $300 a year. That's less than the cost of a daily coffee. Critical illness is an affordable way to ensure you and your family have financial support during one of life's most challenging times. Think of it this way. With disability insurance, you protect your income. With critical illness, you protect your savings, investments, and overall financial plan. Together, they provide a comprehensive safety net. Lastly, let's talk about a solution most of us are already familiar with, which is home insurance. At its core, home insurance protects your home and its contents against risks like fire, theft, vandalism, and water damage. It also includes liability coverage in case someone gets injured on your property. But here's the key. With recent weather events and other changes, it's more important than ever to review your coverage. Over the next couple of slides, I'll walk you through what to look for when choosing a policy and what questions to ask yourself to ensure you're fully protected. Home insurance policies are designed to protect you from sudden and unexpected risks, not maintenance issues. Here's what's typically covered. For types of coverage, we have building, which is your home structure, including attached areas like a garage, your contents, which is your personal belongings inside the home, liability coverage, which are legal costs in case someone is injured on your property or if you accidentally damage someone else's, and additional living expenses. If your home is uninhabitable due to a covered loss, this covers temporary living costs. Now, there are 3 main types of policies, which are your comprehensive, which covers the building and contents against all risks except for those specifically excluded. Basic/named perils covers only the risks listed in the policy, and broad, which is a middle ground option, which provides comprehensive coverage for the building and named perils for contents. Keep in mind, certain risks like flood, earthquakes, or wear and tear are often excluded unless you purchase additional coverage. The cost of home insurance are based on several factors, including the location of the home, its replacement value, and the specific coverage options chosen. When it comes to home insurance, CDSPI has your back. Here's why our coverage stands out. We offer preferred group rates for dental professionals, their spouses and dependents, and others in organized dentistry. You have the potential to enjoy significant savings with low rates not offered to the public, and our coverage is customizable, ensuring your unique needs are met, whether it's for your home, belongings, or liability. And beyond competitive pricing, CDSPI offers exceptional 24/7 claim service, valuable discounts, so you're supported when you need it most. Restrictions might apply depending on certain jurisdictions. And then working with a financial advisor can make a big difference, not just for your finances, but for your peace of mind. We offer at CDSPI no-cost service from certified financial planners, which understand the unique needs of dentists. They can help you review your debt and credit management strategies, help you build a realistic budget, advise on investing in insurance options, create a financial plan, and connect you with other professionals for steps like buying a practice. For example, if you're deciding whether to pay down debt or invest, or if you want to make the most of programs like the First Home Savings Account, which I'll talk about in a second, your advisor can guide you towards the right decision. If you have any questions or want to schedule a no obligation meeting, please don't hesitate to reach out. So let's talk about a great tool for saving towards your first home, the tax-free First Home Savings Account. Introduced in 2023, the FHSA allows Canadians to contribute up to $8,000 per year with a lifetime maximum of $40,000. The best part is contributions are tax deductible, like an RRSP, and the money grows tax-free, similar to a TFSA. When you withdraw the funds for your first home, there's no tax bill to worry about. To be eligible, you need to be a Canadian resident between the ages of 18 and 71, and you can't own a home in the year you open the account or the previous 4 calendar years. This account is a game changer for home buyers, offering tax savings and long-term growth. Our CDSPI advisors can help review your eligibility, maximize your contributions, and use this account as part of your home buying strategy. Thank you so much for joining. We hope you found this video useful. To learn more about buying a home, scan the QR code to find more CDSPI resources to assist you. To see more educational content like this, including articles, learning tools, and interesting posts catered to the dental community, I invite you to connect with us on our social networks and cdspi.com. Thank you for watching, and we hope you will continue to connect with CDSPI. Bye for now.